Welcome to the NISM Masterclass. I'm your host, Sashi Krishnan. Our purpose at NISM is capacity building for the securities market ecosystem. And as part of that purpose, we sit down with industry experts to learn from their insights. And my guest today is Sachin Jain. And Sachin is the regional CEO India of the World Gold Council. And the World Gold Council was set up in 1987 and is committed to the advancement of the global gold industry. And Sachin took over as the regional CEO in March 2024. And prior to this assignment, he was the managing director of De Beers in India. And I think today in India, many investors are investing into gold either physically or through ETFs or through sovereign bonds and various other financial instruments. And I think the conversation that we're going to have today with Sachin will help investors make more informed decisions in gold investing. So welcome to the show, Sachin, and thank you so much for sparing time.
Thank you so much, sir. It's an honor and pleasure for me to be here with you. And the work that you do is noble. The work you do is transformative. So really honored as World Gold Council to be a part of this conversation. Thank you.
So Sachin, let me start off with a question to set the context. Has the Indian attitude towards gold and the way it's consumed, undergone changes over the last 25, 30 years? Because while Indians may still have an emotional bond with gold, do they also today, see gold as a strategic asset?
So let me give you context of what's happening globally and what's the role of gold and why gold today is at the center stage of conversations, both in financial, strategic, and economic parameters.
Okay.
30 years back, central banks were net sellers of gold, and the prime usage of gold was jewelry. Mm-hmm. Fast forward to today, the usage of gold is much more diverse. The usage geographically is much more diverse. Let me start with geography. Earlier, the Western world used to buy it, India used to buy it, and so on and so forth. Today, the emerging markets, which is India, China, Middle East, consume about 74% of the gold annually. So that's changed. But most importantly, the usage sectorally has changed. So to give you some numbers, 20% of the gold every year is consumed by central banks.
Right.
And the reasons why central banks invest in gold is a very different reason.
Right.
About 32% of the gold is consumed by jewelry.
Right.
So from a main usage is about 32%.
And that has fallen from what to 32%?
So almost about 80% to 32%.
Okay. So 80% to 32%.
So only usage used to be jewelry. Now it's some part of it.
Right.
About 42% of the consumption is for financial investments.
Right.
And that's become the largest pie. Okay. And lastly, we see now gold usage also for technology. Right. So, to your viewers, if you look at your phone, the phone will have some bit of gold.
Right.
The large renewable energy systems in the world have gold. And I think that we believe is going to go forward much more empathetically. I mean, most of the faster AI chips, and as artificial intelligence gets more and more democratic, that uses gold. So I think the usage of gold is very diverse. And why this conversation is very relevant, and I can share one number. Last year, the year of 25, the financial consumption of gold and the transactions and the trading and gold moving from A to B and B to C crossed $6 trillion. And if I were to translate that in INR terms on days of transaction, number of days that trading happens, almost we traded over $200 billion worth of gold every single day.
Right.
Which translates to about 18,70,000 crore rupees of gold moving every day. Right. Now that's massive. Right. And particularly over the last 24 months that we've seen, what's happened to gold as an asset class is transformed. So I think hence gold is really the center stage because of multiple uses of gold.
Right. So Sachin, India today accounts for something like 22%. You said India, China, and Asia itself is a very large consumer of gold, and India itself accounts for something like 22% of that. And this demand is primarily met through imports. And next to petroleum, I think gold is the largest import that we have. And this has raised some macroeconomic concerns. So how do we reconcile this preference that Indians have for gold to the macroeconomic concerns?
Yeah. So I think, sir, gold has been a part of a social fabric. I mean, and gold has been relevant not just in decades, but in millennia.
Right.
I mean, go back in times, it was a part of decisions of kingdoms, of temples, of families. And I think over the time, I've quoted this before, according to me, the smartest investor in the world is the Indian housewife, because through her small accumulations of gold that she's done throughout her life, and we've seen it for our parents and our grandparents and all that, it's not just getting small parts of wealth and endowment to the home, they've really built strength to our nation.
Correct.
And we've seen that happen in times of crisis. We've seen that happen in times of even COVID,
Right.
that India stood out because we had certain amount of wealth that stood in households. Now, to your point, yes, we consume a lot of gold, and it has put definitely pressures on current account deficit and so on and so forth.
Right.
The recent the clarion call by a respectable Prime Minister on the 10th of May, I think is unique because it reflects where the economic situation is. And gold has always done a reflection of where economic situation is.
Right.
And I think clearly reflects that. As a nation, I'm sure we will stand behind the clarion call. However, I think there are other aspects of gold. I mean, there is about 40% of consumption of gold comes from the rural sector,
Correct.
where the markets and the other forms of investments are not so available or apt for.
So that's a
level of
question I
investment.
want to come to a little later.
So that's one part,
Right.
and I think it's unhedged, and there are a lot of pillars on which gold is built on.
Correct.
So that stays on. But I think the other element also is the fact that while we see gold purely from an import angle, it's also important to see what gold does in an economy.
Right.
Today, about 65 lakh people are directly employed in the sector
Right.
of gems and jewelry and financial sector and so on.
So it's employment generation is something.
Is a huge one.
Is a huge one.
We believe, and over the last 1 year at World Gold Council, we've been working on a very important project, which we call Swarnim Udan 2047,
Right.
which is a complete alignment with the Prime Minister's vision of Viksit Bharat 2047.
Right.
And the intent is that how can we play a role in the building up of the nation?
Right.
And 4 or 5 themes that have come out, and I'll just reflect on a few,
Sure.
or very importantly, which are core pillars. We believe that if the right triggers are pressed, in the next decade, about 1/3 of the gold that we consume has the potential to come from our own mines.
Right.
So there's a lot of work happening there.
Right.
The gold sitting in households, if
So
properly
that will
done,
reduce the macroeconomic pressure substantially.
which is one part. I'm
Right.
just saying that what will also instill is employment. What will
Right.
do is development in areas which today are untouched,
Right.
and so on and so forth. So a lot of economic development will happen.
Right.
Secondly, we think that if properly done, the gold sitting in the households, there have been attempts in the past of gold monetizations and so on and so forth, but if done with two core areas, which is privatization and technology, I think there's potential of gold coming from households to the mainstream sector.
Okay.
We believe India has the potential to become the jeweler to the world. And hence, it's not going to be just gold importing, it'll be value addition gold exports that will happen from India. And this is the time for India to make a dent in that market. Fourthly, we think that with a bit of regulatory changes around banking systems and banks being allowed to participate in gold more, we think that, and the fact is that even at 22% and being such a large importer and a customer of gold, India has almost no influence on price making. We are a price taker. And we think with the banking sector getting more and more involved, we have the potential to become a price maker of gold and hence really truly transform it there. And last bit, which is purely unique to our nation, is that we think that even the tourism sector and the culture that we have for gold can be celebrated. Today is the time for India.
Right.
And we think that, we often hear that shayad gold tekhano mein daba hai and whatever in temples and stuff.
Correct.
And we believe that there should be, and we are working with certain temples to create blueprints around creating museums of gold around temples. Right. And we think gold will be an important anchor to pull the most sticky and the high-end tourists of the world to India. And celebrate artisans' work, celebrate what gold is to India. So I think gold, if seen from different angles or a holistic view, is not just a pressure on the current account deficit, but can generate in a true sense, uniquely in the world as how we placed.
So let me pick up on one of those things that you talked about. That's why you mentioned the, housewife being the smartest investor in this country. Now, you also said monetize that.
Yeah.
And this has been something that, has been talked over maybe for the last 4 or 5 decades, saying how do we monetize the gold that is lying with households. So in this project that you have, what are those ideas that you have in terms of monetizing gold?
So few. First and foremost is that, like, and I'll give you one of the gaps in the previous one, which which has come out of research, and why the consumers have been a little more, edgy on, and looking at and these have not actually been as successful as you thought.
Right.
So firstly, the current or the existing gold monetization was quite tedious.
Right.
It required almost like 3 to 4 weeks for somebody to assess what is the value of the gold that they have.
Right.
And you would believe that if you're holding your mother's jewelry or your grandmother's jewelry, which holds so much meaning, to really give it to somebody, not being as it is sure, and then saying come after 30 days, they'll know what the value is, was an issue.
Okay.
And I think technology should play a part there. Okay. And there's enough technology available in the world where these outputs of what this product is can be immediately told. So I think one is usage of technology. Second is that it was given to banks, where banks are anyways doing a whole lot of things. Right. And the 52nd thing that they were requested to do was monetize gold. And we believe privatization, where really the existence of certain organizations should be this, where it's the reinventor that I'm here for this reason, that can amplify it, and proper usages. And we've also studied the consumer further. So of this, whatever 32,000 tons of gold that's sitting in India, we think about almost 25% of that is in the form of bars and coins. And important distinction is that when you own jewelry, which has let's say an emotional connect or an heirloom, and when you own bar and coin, the bar and coin connection is very financial. Right. And if incentivized properly, transparently, with usage of technology, and we think that assets should sit in your, in your DigiLocker, stuff like that, if created, I think the young India will bring this out with a lot of confidence. One, of course, they will get some return on an asset, but also truly helping the nation. Sure. So I think if done well, there could be ways to do it.
So Sachin, coming back to the investor itself, why should an investor allocate capital to gold, especially since there are so many investment options that are available today? So if I look at gold, or as an investor I needed to look at gold, should I look at gold as a aggressive wealth generator? Should I look at gold as something that is a strategic wealth preserver, or should I look at gold as portfolio insurance? How should I, as an investor, be looking at gold as a financial investor?
That's a great question, sir. But I'll start with a very simple answer, and I'll go to what we talked about, the rural India, and we talk about preserver and all the acronyms that you mentioned in the context of a
I said
urban
a wealth generator, a preserver, or insurance.
Right. What I'm saying is that we have these acronyms that we look at from a more contemporary way of investment. When you talk to a rural India, which is 40%, they look at gold as saving, not as investment. They say, I have certain money, let me buy gold, and we've seen over the years that they've done really well with it. However, our recommendation as World Gold Council, deeply analyzed and a global perspective, we believe that if a portfolio has between 10 to 15% of diversification into gold, it improves your health of your overall portfolio in a great manner. And it's a hedge, it's a timeless hedge, not even just a hedge for now. And it's a, and it qualifies to all the three acronyms that he said. It's a preserver, it's an accelerator, and the fact is that we've seen over the last 2 years in particular, where the returns of gold have been phenomenal. But if you look at, even if you look at a long-term play of what gold has delivered, I think it's it's delivered between 7% to 15% as a return, which is very healthy. And last 2 years, of course, exceptional. And if you compare that equity, bonds, everything, it's overperformed. However, we take the more, I would say, conservative view, and we would say that two things. One is long term. Gold is not to play. It's not to buy today and sell tomorrow. It's a great investment for long term, for stickiness, and secondly, it helps your portfolio. So we wouldn't say that put 100% of your money in gold, which we would love for people to do. However, I think a scientific way to do is a 15%, between 10 and 15. And I'll also encourage your audience to get on our website. We have various models there, which we like you to play and do things. And one of them is called GRAM, which is a gold return amortization model, which I think is available, where one can go, and there are various reasons on which gold is built on. So geopolitics is one. You have interest rates, you have inflation, all those elements you can put in and see what the output could be. So it allows you to play, but also gives you a view of what we think. So in a nutshell, what I'm saying is gold is a fantastic diversifier. And with the number that I shared with you, with $6 trillion of gold traded in the last 1 year, gold today is the most liquid asset on the planet Earth.
So, Sachin, now you've opened out, a whole set of rabbit holes which I have to go into now.
Right.
Okay,
Let's do that.
So the first thing is you use the word hedge. Is gold truly an effective inflation hedge? Because, does the data actually suggest that over the long term, gold helps you protect against rising consumer price inflation? And let's look at different inflation scenarios. I mean, if you have a high inflation situation, then maybe it acts as a hedge. But what if, because currency tends to get devalued and, a whole set of things happen when you have high inflation. But when you have a, benign inflation situation, is there any need to have gold in your portfolio? So that's the first question I wanted to ask you. One of the rabbit holes.
So I think it's what he's saying is truly a very ideal world, situation.
Right.
Low inflation, low interest rates, all of those things, which
Right.
seem, and more as we've gone, particularly post-COVID era,
Right.
we seem these not playing out the way traditionally they used to play out. And the relationship between equity and bonds, which was in a certain trajectory till 2020, they're all defied. The relationship between equity and gold, they've been defied.
Right.
And hence I go back to the point that we wouldn't say invest everything in gold. We think it's a great diversifier.
Right.
And as a diversifier, it's a very rock solid hedge. And if you look at returns, 10 years, 5 years, even like 20 year, and even long term, if you see, if what it does to the asset itself, it's certainly performed better than inflation and the
Right.
interest rates, and it generally helps you look at the last 2 years where equities haven't performed as they used to over the period of time. And today, when we sit on 2nd of July,
Right.
where this year we started with a certain price of gold, we went to a mammoth price of $5,600 per ounce. We back to 4,000. Even at this level, 1 year return on gold is 41%. So it's, one has to look at it from perspective as to what's happened mid-term to long-term. But again, as a diversifier, as a hedge, it stands the test of time.
Sure. So the second thing that you talked about was geopolitics, right? You mentioned that word geopolitics. So how exactly does geopolitics influence the price of gold? Because, academic research seems to establish that there is a direct positive relationship between gold prices and geopolitics. So risk seems to be something that gold can sort of protect against. But, and that's why, we've always said that gold is a safe haven asset, Very typically, one of the reasons why any asset can be called a safe haven asset is because it is negatively correlated to other asset classes, which maybe gold has, and maybe gold has got, zero counterparty risk and things like that. So it makes it a reasonably, decent assumption that it is a safe haven asset. But coming back to geopolitics, what is that relationship between geopolitics and gold price?
Yeah. So I think first let's reflect on the world we live in today.
Right.
The fact is that, few years back, it was a massive war between Ukraine and Russia. And as a society, we move on. We move on to a new war. We move on to a very short-sighted memory. And life seems all right. And there's no peace in the world. And this seems to be the way things are. The West Asian war came out of, it's not something that all of us are expecting that's going to get to that level.
Right.
And even when the leadership in the US says it's all settled, who knows it's settled.
Yeah, so that 41% return which you talked about 25-26 is primarily because of this uncertainty, isn't it?
But no, not necessarily, sir. So the year where this triggered was the year 2024 when central banks bought a lot.
Okay.
And central banks buy for reasons which were for the nation and to your point of geopolitics.
Right.
Last year was largely driven by the financial markets.
Okay.
So I think we always had a flavor of diversified usage. But to your core point, with the fact when the Ukraine and the Russian war happened, they were almost, certain countries were, assets were seized, you couldn't do much. And if your assets of A nation were lying in a B nation, there were issues that happened.
Right.
And that dooms in everybody's mind.
Right.
We've seen now that central bank purchase is not limited to just the top 10, 20 nations. It's now gone to a long tail. Right. Small countries are buying and want to own an asset that doesn't have a correlation to somebody else. It holds value. value, it
that
stays
it
put.
doesn't have a correlation to other asset classes is one of the big reasons why
It would.
gold would.
It would. But however, when you hold asset, and there are two things happening. One is accumulation of more gold as a nation, and you feel strength from it because it's not collateral. It's like a physical thing that's there.
Right.
But also, you see de-domiciling of your gold, which is lying in different nations, back to your own nation.
Correct. Yeah,
we've seen that happen in India as well, where a large part of the gold that the nation owned is back in the nation. And I think it's a absolute right step to do with the current geopolitics. And the geopolitics is not just centered on one nation versus other. We know the tension between China and Taiwan. We know the whole West Asian conflict. We also know even India and Pakistan and different forces have been plowing for so many years. The US. And all boils down to only one aspect, which is that the global debt today has crossed some levels which are crazy. Just US debt is over $37 trillion today. And how they're managing it, everybody knows. It's out in the public domain that currencies, the fiat currency is getting printed left, right, and center. And hence the confidence on US dollar and hence the ratio of reserves in US dollar-led bonds and even US dollar is going down. We've seen that the global reserves, which was almost about 79 to 80% in US dollar a few years ago, is down to about 50% and moved a lot in gold. And we see this moving because, again, the confidence on forex, the confidence on fiat currencies, vis-a-vis saying, I need to have strength by having something tangible. I think that's going to continue with geopolitics.
So the other thing that you had mentioned a little time back was in terms of why gold relatively looks good compared to certain other assets, say debt or real estate. But my question was that is there actually an opportunity cost in holding gold? Because it is a non-yielding asset at the end of the day, right? You don't get any interest in the gold that you have, and it doesn't pay any dividends either. And assuming you've got a high interest rate environment, for example, where it persists for a very long period of time, then this lack of yield could actually be something that is a detriment to holding gold.
Yeah, I think so. Historically, we've seen that the interest rate vis-a-vis the gold is always inversely proportional.
Correct.
And that has been staying on.
So if there is a high interest rate environment, does the demand for gold or the necessity to hold gold in your portfolio come down?
So whenever we've seen the Fed is an important subject here. Whenever the Fed touches or looks at price or the interest going up,
right?
I mean, it has a direct correlation with gold,
right?
And it's been staying like that. Like for example, right now there is estimation of one interest rate increase that will happen, and hence that's going to support gold.
Correct.
Which is fundamentally. But to your core point, that what is the opportunity cost of holding gold? And I think with the 7 to 15% yield over the years, and you can look at a 5-year, 10-year, 20-year yield, and that's what gold has delivered. It's actually performed much better than any interest rate from that tangible sense. Right. And again, I repeat.
So if you're looking at it from a short-term perspective, say a 5-year perspective where you have high interest rate regimes,
right?
Then may not work.
Well, it might not, but I think that's an individual capacity. Individuals see how you see it.
Right.
But important thing is that gold, that from that sense, needs to be looked at purely as a diversifier first,
right?
And then secondly, as what it really gives you as return.
Okay.
And again, we at World Gold Council not saying that the returns of the last 2 years would be the base always.
Right.
Things will change. And just yesterday we published our H2 outlook,
right?
And we've given 3 scenarios, and 3 scenarios are built on really the key pillars. We're talking about what's going to happen to inflation, right, interest rates, and of course geopolitics, which is an important one. And there's scenarios that we built up. Now, if the world remains the way it is right now, where some confusion, some bits keep going on, and we're somehow moderating around this, the price of gold might be between -5 to +10 range, right? If really dramatically things change from a geopolitics perspective, inflation goes through the roof and all of those things, then there's a potential 20%. And if the world becomes really peaceful and economies are doing really well, which seems very, perhaps the possibility is very, very bleak, then the gold price might drop. But you see, there's correlation there.
Right.
But again, we say look long term, which is important, and see what gold does to the health of your overall portfolio.
Sure.
Than necessarily saying what is a gold return. Although it's done very well, very good return. But our submission is the impact of gold in your portfolio and how your overall portfolio does from that perspective.
So I want to circle back to something you said about rural India and how rural India consumes gold. And you mentioned that one of the reasons why rural India used to buy gold was lack of lack of access to other financial assets. But that has changed dramatically today, right? Today, with so much of digitization happening, I mean, everybody now has got access to financial products. It's very much easier now, say, to buy a mutual fund or to buy equity or whatever it is. It's got democratized. So, will that impact, for example, how rural India looks at investing into gold?
I think so. While that has changed, I think gold is also evolving.
Okay.
And I think I'd like to reflect a few things that are happening right now in the market and what's coming.
Right.
So, for example, the gold-backed ETFs, which just to share with you some numbers, 1st of January 2024, we were at about 40 tons of AUM. 1st of January 2025, we were about 56 tons of AUM. Now, you could debate that 16 tons is not a big deal, but 16 tons on a 40-ton AUM is a massive jump. And last year, on the 1st of January 2026, we were almost touching 100 tons.
Yeah.
Now, this is massive changes that are coming, where again, digital ownership of gold will also increase, and I think different parts of rural India and the whole India will buy. So the point isn't really that the access is an issue. I think it's getting there, and I think it's not the next 10 years will not be a divide between urban and rural as much as it will be about generational gap. And I think the new India is a digital India.
So let me interrupt you over here. You said generational gap. But younger India is also leaning more towards financial products.
No, so I think that's what I'm coming to. That gold, according to me, with what's happening in gold and the stuff that we're doing at World Gold Council and globally what's happening, I believe gold will be the most contemporary and savvy investment asset.
Okay.
I mean, there's a lot of work happening on blockchain technologies, on creating highways, around tokenization and other elements, and that's a new world coming very, very strongly. And I think it'll offer 3 elements. I mean, to simplify it. It'll make gold fungible, which means one organization to the other, one person to the other, one nation to the other.
Right.
It'll become accessible 24/7 like any other contemporary financial asset class.
Right.
And third, and the most important that everybody worries about gold, is that it'll make it authentic.
Right.
So it'll say what it'll mean. And I think with these 3 things, unquestionable, I think, and if those highways will be created, I think there's a lot of entrepreneurship that will come in to create products for rural India, for urban India, for an HNI, and different things with different returns.
For the younger generation.
For the younger generation, they'll come in.
Right.
But the fundamental will be that it'll be a less rural-urban divide. It'll be more that a younger India will have an access to digitized economies, and the young kids, they live there 18 hours awake, 80% on a phone,
right?
And they will consume there. They'll be very comfortable owning assets on on their digitalized area. And gold, I can tell you, is not sleeping on it. Gold, the work happening in the gold industry is massive to transform this, the image, but genuinely what gold will mean into the future. So we're getting ready.
So if I were part of that community that now sort of invests into these financial instruments with gold as the underlying, now there are a whole set of things that influence how gold prices move, right? Yeah. For example, it could be the local currency dynamics, for example. So gold, as you initially mentioned, is driven by global spot prices. So if the currency dynamics moves in a particular way, gold will also move in a particular way. Similarly, you mentioned US Fed, right?
Yes.
So if the US Fed cuts rates, the opportunity cost of holding gold also comes down. Yeah. So gold prices could move that way. Central banks you mentioned. So central banks could go on a buying spree and then gold prices could go up. So as an investor, how do I keep myself on the top of all this? Because, I mean, as a retail investor, as a rural India, as urban India, as young, whatever I am, how do I keep myself on the top of all this to understand
I think
how gold prices
go? I think so. The answer to your question lies in the question itself. The question that you said is that there's such a diversified usage of gold, and it's the financial markets, it's jewelry, which is very significant in nations like ours. It's the central bank buying and technology. So I think all the 4 have their own science and their own world, right? And once in a while something plays out. So as I said, 2024, the large domination was a central bank buying.
Right.
Last year was a financial markets buying. Right. and something plays up. So I think if I were an investor, I would say that the usage of gold is not dependent only on one thing. So if, for example, the world becomes completely peaceful, is the usage of gold going to drop? Perhaps no, because a large chunk of what gold gets consumed is jewelry, and that's not done. If I were to say that if the financial markets completely stall and they're unheard around, then central banks are there. So I think the diversification is actually a very large strength in today's time of gold.
So, if I may sort of extend the argument that you've been making, including the fact that look at gold as a long-term asset, it seems to me that for any retail investor, in gold, his only strategy could be buy at any price and hold for the long term. Because there are so many determinants of the price of gold that you don't know what's going to happen tomorrow, or you don't know what's going to happen day after tomorrow. But what you do know is that if you hold gold for long enough, you should be making that 13% return. Because, I mean, if I go back to the day I was born, gold was priced at 60 rupees. Today, gold is priced at, 1.5 lakh rupees. So it's given me that, if I had invested when I was born, I would have earned 13.5%, which you said is, that 10 to 15% kind of range, which most people will get over long periods of time. And that's 65 years. So that's a very long period of time. And that's actually a very interesting asset class, because 65 years and it's still given us 13.5% CAGR. So it's like buy at any price, but hold for the long term. Can that be the only strategy?
Not necessarily, sir. I think we need to see it from a different perspective. And I see that as we go into the next phase of digitization, I think there'll be more ways by which, one example we already talked about is how do you monetize gold that is sitting in the household? And it's not about then buying that gold. It's about, if I'm an Indian housewife or, I hold, let's say, 100 grams of gold, I want to own that gold, but I want to give it for some other usage, earn interest out of it, and other things. So I think those mechanisms will come in. That'll be one. And the other aspect is that while you've been holding gold for long, again, don't look at gold only. You have to see the effect of what it does to your overall wealth. I think that'll be important. And you have to see it against property, against, of course, equities, against debts, and hence a balanced portfolio. And again, different people see it slightly differently in terms of risk, in terms of constant returns, and so on and so forth. So that varies.
So you were talking about a research study which the World Gold Council did, which said that a 5 to 15% weightage in gold would sort of impact the risk return of your portfolio very, very positively. So could you just give us a little bit of color on that?
Yeah. So we have we don't have research. That's active work that we do, and there's a lot of work that our team over here that talks to investors and why that diversification is good, and there are a lot of modelings that we do in terms of what your portfolio, if it was a different ratio, could give you an overall return in 2 years, 5 years, 10 years. And I'll encourage your viewers to get on our website. The modeling is there called GRAM, and it'll give you all inputs of what a recommendation is. And then you can say, okay, my equity is more, or bonds is less, or real estate is more, and it'll give you a return. So, but we've seen over a period of time that in different scenarios, short term and long term, that range, is good. And ironically, just last 2 years back, when we used to talk to investors, and I'm talking about even family offices or large scale institutional investors who believed, and particularly Indian investor who would say, "Bhai, gold to hai hamare paas." Now, gold, there's a subliminal thought कि भाई घर में तो पड़ा ही है. Now, we've seen over the last 18 months that investors are looking at more scientifically to saying, do we have a diversification of that much, or we just believing, or there's a perception? And a lot of people are upping the game and really looking at it scientifically. So our only urge would be see a bit of science in it. Minimum 10 is a good one, and then play with that model. Because every individual's assertion of risk is very different. And what's also changing is that in China last year, and again from the Indian team perspective, which is led by my colleague Sheila, they've done a great amount of work to talk to institutional investors, but also large-scale institutions like insurance sector and provident fund sector. Now, last year, the China government opened that. Opened these sectors to allow investments in gold. That triggers a very large-scale consumption that we believe will trigger. And in India, the Provident Fund regulator has opened that up. Now, what that really means is that any investor who has those large set of AUM wants to also diversify their investments. And it's not because the government is saying we should do it, because that's the need to make their portfolios more and more healthy.
So if an investor wants to take that say 10% to 15% exposure to gold, there are multiple ways he can take that exposure. He could buy physical gold, for example, or he could buy, an ETF, which you had mentioned, or he could buy electronic gold receipts, because the NSE has now started talking about electronic gold receipts. So how exactly should we look at each of these instruments? At one point of time, we even had sovereign gold bonds that were available. So as an investor, how should I look at these instruments, and what would be the ideal instrument for what kind of an investment?
Again, I think the beauty about gold is that you can own gold, or own it and keep it the way you're comfortable.
Yeah.
I mean, when you look at India,
as an investor,
a large part of India consumes physical gold, right, for example, and that's available through jewelers. A large part of India consumes it through jewelry. Right. And you can adorn, you can feel good about it, and when you wear gold, it does something in your heart.
Right.
I mean, that's one part. Right. And as the digital world is emerging, we have seen great success in ETFs, which are physically backed by gold. And I think ETF is such a strong product, which is regulated under SEBI. So you can hold gold and just sleep well, because it sits. You don't have to worry about its security and other things. So it's a great product. We've also seen great accumulation in the digital gold, although digital gold is not regulated.
Right.
But ironically, we had a SEBI sort of warning that came out in the papers in December last year. Right. And January actually was the biggest increase of AUM in the digital gold ownership. Over 15 crore Indians have invested in it, because again, it democratizes it. It doesn't need any demat account and so on and so forth.
But the downside is it is unregulated.
It is unregulated. Right. And today, while there is a lot of belief in the brands and stuff.
So why would a person want to go into an unregulated instrument when you have an ETF and you have, for example, an electronic gold receipt?
That's the beauty about India, because we're such a large country that certain things appeal, certain things don't appeal.
Right.
And there are markets for pretty much everything and every place. I think digital gold offers that democracy to saying I can start my investment in 10 rupees, for example. So that entry level, I think, is a big one. We've normally seen that in digital gold, the ownership isn't large. So it's very small numbers, but a large number of people have got into it. And you're absolutely right that any night by fly operator, if he takes away somebody's gold, it's going to have a very negative impact on everybody, and none of us want it. But there's a lot of work happening, conversations happening with the regulators and the government, that some regulation comes in it.
Right.
Today it doesn't exist. And I think with as you mentioned about EGRs, that could be one way where the underlying asset could be in the form of EGR. So there will be solutions, I believe, that will be coming through. But the beauty is that India is so huge that the nodes and the reasons why people consume physically, with ETF, digitally, or lying overseas, or whichever way, there is scope for that gold can offer today.
Okay. So you're specifically coming to ETFs, and you had mentioned, something like 100 tons of gold.
By almost like beginning of this year.
Yeah, by the beginning of this year. Now, you compare that to the US markets, I think the amount is something like 1,600 tons.
That's right.
So we are still, a very tiny fraction of, the gold that, say, the US investors have put into ETFs. So if gold was such an important part of portfolios in India, why is this amount so low?
Well, I wouldn't say that we didn't believe in gold. I think as we already talked about the number,
the way we consumed it was different.
The gold that we own is 32,000 tons.
Right.
So that's the gold sitting here.
Right.
That's a belief on gold, which from that sense in America is very different. The digitized way of consumption has been different. And I think, as I said before, I think ETF is a very strong product. And if I were to go back in time, and I'm just talking simply, what I would change, and if you say you'll have magic wand and you can change something, I would just simply change the name of ETF to make it something more simpler. Okay. ETF seems so, so technical that a simple investor on the street needs to either know it or needs to be educated. But it seems like, oh my God, what the hell is it?
Right.
So we need to simplify it. And I think in the last year, I've seen and I've witnessed a lot of energy that's been put behind simplifying and making it available as to how easy it is to get or own an ETF and what it does. And I really think that we are at a cusp of a phenomenal growth in this sector, particularly on the ETF side.
Right. So you also mentioned China opening out, gold investment to institutional investors, and you did mention that the pension regulator has been
and insurance
and the insurance regulators have opened out, investments into that insurance funds and pension funds can now invest into gold. So how would a exposure to gold help these kind of funds?
I think,
I mean, diversification is one thing that you have been mentioning right through,
Yeah.
and enhancement of returns. But for them, they have other assets or classes also they can invest into.
I think I'll go back to my diversification point only. But China, I think, is a very interesting case study. I think 20 years back, they were importing gold the way we were importing gold.
Right.
They made changes in their mining sector, regulations and other things. Fast forward to today, China is amongst the largest miners of gold in the world. So they do a lot of mining of gold. So that's a very important change, which perhaps, as I mentioned to you, we're looking forward to make that similar change in India. But somebody who runs an AUM of that size is purely seeing and witnessing the benefits of gold, which they're technically not allowed. They know their portfolios will get better. They want to invest, and I think that's what they've really been. What the governments have really done is that they've opened it up.
Right.
Now, China, because of course, their own mining and everything, they have a lot of confidence in gold because what it does to the nation in that sense, and hence I think their diversification. In India, the Provident Fund regulator has opened or allowed diversification to gold already. So that's been issued in December of last year.
Right.
We've seen small inroads on that, and I think an investor or a manager there is looking at it very scientifically, and the benefits and the merits of gold stand out. So it's nothing new. It's just the same way. It's a different level of a fund, but it does the same benefits to a portfolio.
So, on a slightly different track, the derivative exchanges play a very important role in price discovery in commodities, right? And how are these markets linked to the physical market? Because, there's a growing volume that we are seeing in gold derivatives. In fact, some of the, the derivative exchanges have, made it much simpler to trade in gold. The unit traded units have also come down quite significantly. So how do you see the derivatives market growing as much as you see the sort of financial instruments associated with gold like ETFs, etc. growing?
Right.
That was one question. But the second question was also that if you do have to have a derivatives market which allows physical settlement, there is a whole set of infrastructure that needs to be developed around that, right? In terms of valuation, in terms of assaying, in terms of warehousing. How do you see that infrastructure building out in India?
I think SEBI has done a phenomenal job in controlling the negative impact that this future tradings can have.
Yeah.
And that's to do with the level of investments that somebody can come in,
right,
and almost avoiding a retail investor,
right,
which I think is a big credit to SEBI that they've done it. So
right,
at the base of it, it's not that I sit on the fence and I say, let me put 100 rupees, somebody's going to be 900 rupees and let's play.
Right.
So I think they reduce it. We've recently seen the example in China where the derivative markets had gone beyond the roof and everything was almost a gamble or a hedge that
is in gold futures.
Gold futures, which now they've restricted to say that encash it. So you might have heard in the previous few weeks that change has happened.
Right.
But I think one is, of course, as you mentioned about the physical infrastructure and stuff.
Right.
But I think the caution has to be that it's not pure play gambling that's happening.
Right.
It's people in the business who really have the capacity and are doing it for a reason should be there. So for me, 100% credit to our regulator that they've managed it to get us to a point where this is not a black hole. It's not that somebody's just playing a gamble. Of course, there comes with the risk, the upsides and downsides. But will this build the future? I think the future will truly be built on what gold does, keeping in mind the other factors.
But do you see these large jewelry manufacturers and those users of gold using the derivatives market?
They do purely for the hedge.
For
the hedge. And I think it's good because when they come out with certain prices and from gold from a physical form to actually being owned by consumers a long time. So gold gets melted, gets converted into jewelry, it's on the stock floors. So I think that hedging really safeguards the business to a long way.
Right.
So as far as the derivative market is used for hedging,
right,
which is for a specific purpose, and India, that's growing much more and more. And we've seen just in the last 2 years that about 17 new jewelry companies are now
hedging their
now in the IPO, so they're required to be more transparent. Hedging is the only form to bring that transparency and the confidence.
Correct.
I think more and more people are doing it. But when you say I have the courage, and I say courage very consciously, our industry used to be almost pointed towards saying it's an opaque business, nobody knows what's going on, how much is black, how much is white. And the fact is that over the last 5 years, the most successful jewelry companies are now on the IPO, where things are open and transparent.
Right.
And hence hedging becomes a very important pillar to build those businesses. And these markets.
And more and more of them are now sort of hedging their gold positions.
Absolutely. And why I go back to an IPO area of how jewelry companies are, because they're absolutely transparent. So going back, you would always blame or sort of point to saying, "Bhai, pata nahi kya ho raha hai." You don't know with the transparency. This is as transparent, and hedging is a very important part to build these long-term businesses.
So another thing which I wanted to pick up from what you had said some time back was the use of technology, and you had mentioned that there is authentication systems that are now available for asset traceability from, say, mine to vault, etc. Could you tell us a little bit about
lots of work
that and how that has sort of engendered confidence in the entire?
So I think lots of work is happening there right now. I think if you were to say that, as World Gold Council, we are a membership concern of about 32 gold miners of the world, and majority of them, almost plus 90% plus, every ounce of gold that's coming from the mines is on the blockchain, right? On LBMA, which is a very important nodal body, all their refiners, every ounce of gold that's going through the refineries is on that blockchain.
So that is a newly refined.
So it's at least there's a starting point. Right. So I think that's a very important change, which was not the case. And in the global gold world, we still know that about 20% of the gold comes from artisanal gold. Right. So about 80% comes from these organized mines. Now, artisanal gold, there's nothing wrong fundamentally there, because somebody is doing work to bring food on the table for the family. But what it does is, at times, that we've seen that the consumption of it gets into hands of illegal players and terrorists and so on and so forth. And I think this channelization of a proper blockchain and source transparency will help the world at large. Every important player in World Gold Council, and particularly our CEO, he's determined to make that change, where every ounce of gold that comes in gets through to the formal systems and doesn't get into hands of illegal participants. So that is one important fundamental change.
So that is all new gold that is being mined today can be tracked.
Can be tracked, traced, and if you go into the world of tomorrow, like while we say gold is a great collateral, but think about it, that if A gold of an institution is sitting, let's say, half a ton is sitting in a bank, and you want to give it to B bank or something, to physically move that brick and take it out is almost impossible. So while it's a great collateral, but moving is not so easy. And we see a world based on strong technology, when almost unmutable technology, that all of these things that are not so conveniently possible with gold will happen. So as I go back on the three elements, fungibility, authenticity, and accessibility will happen. And it wouldn't matter, and I see this world coming much more quicker, where it wouldn't matter where a physical gold is sitting. But you could do everything else as a financial instrument.
So I just wanted to also ask you a question on this India International Bullion Exchange, which Gift City has sort of put in place. How do you see that transforming India's position in the international markets? Because you also mentioned that we have always been a price taker, right, in gold. So will this create local price discovery, this kind of an exchange? And if there is local price discovery, do trading premiums drop? Can we transition from being a price taker to being a price giver?
I think it's a great start of a route or a direction that we're moving. IIBX has been formed. I think we should take a lot of pride in IIBX formed in India. It's the first spot exchange of gold in the country. It's done its own bits. Right now it's taking a lot of benefit from the arrangements under SIPA with UAE. So that's really happening. They're learning I think they're setting the house in order. They're also seeing a lot of friction with the trade. So over particularly last 1 year, there've been issues around how the gold contracts happen there. So there've been a lot of issues there. But I think they're learning from it. But I think from a long-term perspective, what should the nation do? If there is a single point of entry and exit of gold in a nation, everything will come into the country from an organized play. The tracking will be simpler. The magnetism to organized way of working, which is how the direction of the nation is traveling under NSE, under SEBI. I think all of that will amplify. And I think the way gold is looked at today is very, I think, in bits and parts, in different tranches. And the moment you see it holistically, if let's say the gold coming in from IBX is converted to BDRs, EGRs, and can they flow into the country, I think all that financial movement of gold will become, if seen holistically, IBX will play a very important role. So I wouldn't worry about the current issues and the scale. I mean, they're doing well, but can the scale increase? Certainly yes. But strategically, if some levers are pressed, and if somehow IBX, and I see a future where IBX is a single point of entry and exit of gold, and hence why I also use the word exit. So it's not that we need to be only importing gold, but we should be able to also export gold via that spot exchange market, and I think that'll be the true essence of what India can do.
Sure. So I had one last question, Sachin, and that was, you were mentioning this Swarnim Bharat 2047 project that you have, and you had mentioned that there are 4 or 5 big initiatives that you want to do. But in terms of financial sector and reforms that we need around gold for the financial sector, what are those 1 or 2 suggestions that you think can make this gold a more easily accessible product and more, sort of more popularly used in portfolios?
Yeah. No, I think from a 2047 perspective, where we're saying that the current GDP size of whatever $4.6, $4.7 trillion has the potential to become $30 trillion.
Correct.
And if you see the maths behind it, if we grow even at a 5.5%, we'll get to $23 trillion.
Correct.
Let's take that scenario. At that scenario, we're talking about at least 4 more Indias getting added up.
Correct.
And that's the potential, and we are uniquely positioned to be in that scope of things. Now, financial innovation, financial expansion will be a very important pillar of it. And hence, the 4th element of the pillar I talked about was the evolution in the banking regulation, where the banking sector needs to be opened up to participate in the gold from, let's say, warehousing, trading, all of those elements. So that's a very important pillar. But the other one is that we also, under this project, as an outcome, we're not creating a report that should gather dust. We're activating it. So we created 3 workforces, and one of the workforces is, with their consultation with RBI Ministry of Finance, is a workforce on the financial changes that's going to be set up. And a part of that is creating the first global gold innovation center that we're setting up now. And part of that will be the financial innovations that truly can, I think it's our time as India not to just, take everything that's happening in the Western and the Eastern world, but innovate things that can go out. And financial sector has that charge. I mean, you've seen the UPI success. We are the only nation today, you can buy a butta on the road and you can pay by UPI. We're the only country in the world. So I think financial sort of innovation from that sense will happen in India. And as gold gets more contemporary, easy, ownership on phones, digital, digilockers and all that, I think new startups will come with some great creative ideas to amplify this. Sure.
Thank you so much, Sachin. That was a fascinating discussion.
It was really my pleasure and honor, sir. Thank you very much for having us.